Good morning, traders and investors. Thanks for tuning in on this big CPI Wednesday. Today is March 12th, 2025. Of course, the CPI data coming out at 8:30 a.m. Eastern Time. We're going to be breaking in with that news, get a quick reaction on it. We also have a great guest on today to go over those numbers. Putnam, former chief economist at CME Group. Also going to talk a little potential de-escalation of the North American tariff. I don't want to say the W word, the war word. Also, Intel up about 8% here this morning. Some news that we're going to go over. Tesla registrations out of the US, not great numbers. And the guys are excited to talk a little bit of the energy trade, potential electricity deal here that Trump is talking about. Again, at 8:35 a.m., actually a little bit earlier, about 8:30, we're going to bring in Putnam, our guest. Let's get it going here on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
There is Christian Fromhertz. Christian, how's your morning going, sir?
Good morning. Let's do a quick rundown of what we've got so far in the markets. Let me just bring my screen up. There we go. First of all, I want to do just international markets first. That's usually what I start with in the beginning of the day. The Hang Seng was down about 0.75% last night. The Shanghai was down 0.33%. That's the China markets. Nikkei was flat. You got a nice move in European markets this morning. Euro stocks are up 1.5%. And the DAX is leading those European markets up 1.9%. So real nice move from the European markets, which were down 3 days in a row. Let's get over to some commodities this morning. Crude is catching a little bit of a bounce, up 0.4 percentage point. Gold, last I checked, was right around flat for the day. There it is. Still kind of consolidating up there. Silver, let's get to silver really quick. Silver is actually outperforming gold a little bit. A nice little move here, up 0.4 percentage point. Crude I mentioned. Let's go to nat gas futures too, which I believe are down a little bit, down 1.3%. Swinging over to the equity futures, we got a little bit of a move here before the CPI report that comes out at 8:30 this morning. S&P futures up about 0.7 percentage point, trying to claw back some of that move. This from yesterday. NASDAQ, let's bring up NASDAQ futures. They're up about the same this morning. Trying to reverse a little bit, up right now about 0.9 percentage point. And then finally, Russell futures, which are also up, but less than S&P and NASDAQ, up 0.4 percentage point. VIX futures also, which I found was interesting yesterday, were actually down while the S&P was also down. You had a little bit of a diversion there, and they're following through to the downside this morning, down about 3%, and that's right around 26.
Woo! Take a breath, Christian. That was good. Thank you.
That was good.
And there's Dennis. Dennis,
on?
how's your morning going? How you feeling on CPI Wednesday?
Well, we're ready to get some inflation data here, and we're feeling pretty good. Like the market, I liked yesterday afternoon. Obviously, yesterday morning with the escalation of the trade war, I'll say it, between Canada and the U.S. You know, Canada, Doug Ford was playing tough guy, talking about, you know, the electricity tariffs, talking about cutting off electricity altogether. I mean, it was really getting ugly. And then in the afternoon, we had some de-escalation, and that's what the market wanted to see. They wanted to see that, hey, you know, let's stop being, you know, two tough guys here, and let's actually start to talk, and let's start to, you know, figure this out. Because one, this trade war is not good for anyone. Two, you know, we can't be, you know, all of a sudden just like you know, we've been allies for 200 years here. We got to figure it out. So the de-escalation yesterday was that Ford said that he wouldn't put the tariffs on the electrical, and then Trump said he would maybe not put the increased tariffs on the steel. So that de-escalation, the market was definitely applauding, happened just after 2 o'clock. S&P started to rally, you can see, or after, actually it was maybe around 1 o'clock, but the S&P started to rally and then continued to rally. We did sell off late in the day, and everybody's like, oh, here we go again. with the sell-off. But what I'm going to say about the sell-off is there's a lot of closing imbalances that were really heavy to the sell side. A lot of times those orders are put in earlier in the day. So that's why I tweeted out yesterday. I said, I'm buying tech stocks on the close because I think we snap back after hours and overnight. And that's exactly what we did. I bought some Tesla, I bought some Nvidia, I bought some Robinhood, I bought a whole bunch of tech stocks.
Woo.
I have flipped out of most of those because this has been a nice rally. And you don't want to take it into the CPI and then it's all just poof and gone. We're still in a trader's market. Did hold a little bit of Robinhood and a little bit of Qs in the long-term account. So I've been slowly in the long-term account starting to accumulate. 2 days ago, bought some emerging markets. Yesterday, bought a little bit of Qs, a little bit of Robinhood. But light nibbles, like you're doing like 1/3 of what you really want to buy. So that's where I'm at right now, long term. Short term here, CPI, CPI, CPI. It's all it's going to matter.
Dennis, any thoughts on those imbalances? Do you think that there's any reason for that? It's kind of, it's not month end, it's not middle of the month. I was surprised that we sold off that much into the close yesterday.
I think you just have de-risking going on here. And we have seen quite a few days here over the course of the last few weeks where there's a lot of sell imbalances on the close. I think you have a lot of institutions that were very levered, heavily levered into tech stocks. It could even be, which we've talked about briefly, is a little bit of the de-escalation or the carry trade as well, where you've got people borrowing in Japanese yen and then obviously been investing in U.S. tech stocks and making a lot of money doing that. I mean, that trade's been coming off there too. But institutions like to trade on the close because they know they can get big size done. So that's why you often see these big exaggerated moves on the close. Sometimes it's higher, sometimes it's lower. It's very prevalent on the third Friday of the month, the end of the month, the end of the quarter. But when we have these higher VIX days and the VIX elevate over 22, 23, 25, you see these moves as well. Institutions are jockeying out. Institutions know if they trade in the middle of the day, they're going to get gamed by high frequency traders. Like if you're trying to buy 500,000 shares of a stock, you're going to move the price. If you're trying to buy 500,000 shares and you do it on the close, though, there's other institutions that are saying, I'm on the close as well. So that's why institutions really like to trade on the close. And that's why you really see a lot of movement on the close, especially when the VIX is elevated.
Christian, do you use imbalances for like trading at all?
I don't. It's not something I'm not really trading that much on the close. So no, but it's very useful information, especially on a day like we had yesterday, where we were kind of if you look at how we were just kind of selling off into that close yesterday, that's definitely useful information. But yeah, I mean, it's just with this market, you just can't seem to like get a consistent move. Especially to the upside. To the downside, the market just seems like it's going much easier. But to the upside, we hit a little bit of resistance there for the Qs, and again, we have that nice move from about 130 on, as Dennis mentioned. But I was just a little bit disappointed with the follow through. I knew that, of course, we have the CPI report, which we could preview that really quickly.
I think so, and maybe there's some selling ahead of that too, Christian, where people are like, okay, I don't want to take it through the CPI. We bounced in the afternoon. We had a significant rally. 130 S&P points is nothing to sneeze at there. We were down significantly. We had at one point in time going way higher. And again, we're still like 80 points off of yesterday's low. So there's still people this morning sitting on profits as well. I mean, CPI matters. So let's preview that, Brent.
Yeah, sure. So I'm looking for core numbers for February. Just remember, this is the February reading. Month over month core reading expected up 0.3%. The year over year core reading expected up 3.2%. That base reading also expected up 0.3% on a month over month basis. Just a little reminder here that core figure excludes the volatile food and energy spaces. So yeah, it's kind of like I like to look at core, but I know people like to look at the base. I know, Christian, you like to look at the month over month reading just because it is a little bit more recent than obviously a year over year reading. Yeah, I don't know. How you guys feeling here ahead of it though?
I think It would be it would be a great sign if the number comes in less than that 0.3%. We come in 0.2, we come in 0.1. This market's going to really like
Love
that.
it. Yeah.
I think as well, and in addition to the PPI report, I think that looking ahead already to the Fed meeting, which is a week from today. And whether Mr. Powell is going to blink and basically start to acknowledge that there's some softness in the economy. I know that'll be great when we get Blue on a little bit later, because I think really that needs to kind of change. And in order for us to get a more than just like a half a day bounce, I think something needs to change in terms of the inflation data, which in turn can possibly get Powell on the side of getting back to easing. So I do think that this data, while of course some of the inflation data lags a little bit, but I would be really interested to see if some of the things that we are seeing a little bit of overall economic softness might trickle into these inflation numbers today and tomorrow.
Keep an eye on the TLT too. Like, we've been kind of drifting a little bit higher as of late. TLT is a risk-off vehicle, so it's not necessarily just because they're expecting that rates may go lower with the TLT higher. It's been risk-off to a certain extent, so people hiding out of equities and into that. It's a very important number today. I mean, IWM's at the lows. It's the most sensitive to this. XBI, IWM is trading right near the lows. Most sensitive to it, absolutely. So it's a very important number here. Blue's going to take us through the number as well. So we're going to find out in 19 minutes. And that's going to be, as of this time, like people are saying, as of this time, I'm trading neutral. So I'm back to market neutral. I went a little bit long yesterday on the close. I felt good about it. I'm back to neutral because I don't know how this number is going to come in. I mean, it comes in hot, Katie by the door. If it comes in even, I think the market will dip initially, but I think the dip gets bought. So this is my scenarios. Comes in hot. We're going back down and retesting those lows. Comes in light. Then we got green light go maybe for a little bit. Comes in even. It's going to be choppy, but I think the dips get bought if it comes in even. That's how I'm playing it.
Yeah, I think also kind of it's interesting when you look at with this SPY. I've put these two trend lines in here just to kind of show that we're in this downward channel. We're kind of right in the middle of the channel. So, earlier in the week, we were testing that, the low end of the channel. So, it's kind of like decision time. And that makes sense to me, Dennis, while you're saying you're kind of flat neutral. We'll see what the number does. And yeah, I mean, I think if the number, I agree with you. I think if the number comes a little bit hot, don't forget we have the PPI tomorrow, which sometimes is a little bit more forward looking. So I wouldn't be surprised if we get like 0.3, 0.4 and then PPI comes out tomorrow and saves the day.
Let's keep it moving here. Move away from the inflation talk. We're going to get enough of that in about 15 minutes here. And let's go to a news item from overnight. Intel shares were trading up. Last I checked, about 8%. So there was a report that TSM was looking for a joint venture with NVIDIA, AMD, maybe Broadcom to operate some Intel factories. And bulls did like this news in Intel here overnight. What'd you guys think of this one? I'll let you go first, Dennis, on this one.
Well, I'll just talk the stock technically. I mean, we're coming in and we just came into a massive area of support. This stock has a triple bottom from December, January, and February in the 1870 to 19 area. So yesterday we get down to the low 19s, 1929, kind of bounce out of a little bit of it with yesterday. And now overnight we get a good headline. The stock bounces out of it. So support is very well defined. Now, resistance is a different category because the stock has come off significantly, just like everything else. So it's a lot of air above here. I think there's room initially to 22, though. So I'm not chasing it this morning. This is not the market to chase stocks in. But, if you get a dip back down, support 19 to 20 is all over the place down there.
Yeah, that's a great point that you're making there, Dennis, is that it's all the way back to support. I haven't been watching Intel, and of course, like this was a big story a couple of weeks ago about the possibility of Taiwan Semi and I forget who else. Was it Broadcom? I think that might have been looking at them, I think the foundry business. But the stock went all the way up to like 27, almost $28, and then all the way down to where it was trading before that and down to that support, which is a great point. So we do have a nice bounce this morning, and but I just astounded that the stock gave it all the way back. Intel's not one of the names that I trade that much, but wow, from that move, get it back all the way back down to support. That's a great call. Because there is an awful lot of support. Look at how many times we've come down, prices come down and tested this 18-19 level. So lo and behold, news comes out that they're looking at it, and stock much cheaper. So that factors into what they're doing, but much cheaper than where it was a couple weeks ago.
Sure.
Continuing on just that thought, I mean, this is where we're at, is we've come down far enough on a lot of stocks that we're finding long-term support areas. Somebody just mentioned AMD. AMD 90 to 95 has been huge support for the stock, was huge support for the stock for a long time. I mean, if you just start going through charts, there's a lot of stocks that have come down to longer-term support levels here where, it's not going to be just easy sledding for the bears to just keep continuing to hammer the market. We're oversold. We're due for a bounce here. And I think, you just got to look at those long term. Go out farther than a tick chart. Go out farther than a 90-day and start finding, where these stocks were trading at, some of them a year ago. And you're finding levels in here again. So I think the easy money has been made on the short side. I think it's now going to be about, obviously, as we get new information, but I would not be surprised if we start to see a little bit of a rally out of here, obviously still depending on the CPI.
I'm starting to look at Broadcom. Broadcom there's nothing wrong with that earnings report.
Yeah.
They got an initial bounce. It was a bit sold off. Just a really tough time, obviously, for semis right now. But, if this market can kind of put together like more of a sustainable, move from the lows, I would have to say Broadcom is probably the name that I want to buy in the semis group. Because it's really back down to where it had earnings, not this last quarter, but the quarter before, and I see a lot of support here, right around 184.
Yeah, for sure.
Is this a name that you like, Dennis?
So if you took a chart and you look, and just drew a flat line across, even say 180, let's just ballpark it to 180. I mean, you go back, 180 was a level that we topped out at 185, but we're trading in integers here. In June of 2024, and then we struggled to get through that area, the same area, in October of 2024, and then December of 2024 struggling. Then we gapped out of that, and we went to the 250 on the great earnings report. Well, we've fully filled this gap now, and we always say old resistance can become new support. So I love your 180. I think it's a huge level. I think that's where we're at. I think that's where I'm at, is that, you know what, it was kind of predictable that the market was going to go into a weaker period because, this tariff war. But, if we can just not get any more bad news out of the Trump administration, let's just say, de-escalation, just even stay the course here, like no more like escalating of the tariff war, then maybe some of these stocks can actually start to catch a bit off old support levels. And AVGO has a great level around 180.
Yeah, there's a question from the chat, which is a pretty good one. Why not just buy SMH? I mean, it really depends. There's also support here, right around this 223 level. So I'm seeing support here. Like, this would be a nice place for bulls to defend the whole semis group, but it's preference. Like, I like Broadcom because they had good earnings. Not everybody in the SMH has good earnings. So, sure. but it really is preference. Like, do you want to go? Do you want to go after one of the leaders, or would you rather just go after the whole group, thinking it's oversold? Depends what depends what your preference is there. But I would watch as well in the SMH ETF 213.
I think that's a great point. And I think, in some cases, if you're a long-term investor, like for me yesterday, I was like, I'm looking through charts and I was like, I'm just going to buy a little bit of Qs too. I get a little bit of everything there. So, I mean, as a trader, it's more fun to do stocks. As a trader, you can get on more alpha by doing some good stock picking. I mean, Christian has a lot of stock picking skills, so that's why he uses it. So I think it depends on who you are. If you're a long-term investor and you're just dollar cost averaging in the markets, it's a great way to do it as well. Maybe you're upping it a little bit more right now when we're in a weak market. Maybe you're just, not comfortable having individual stock risk and you buy the whole sector. But, if you are comfortable in having individual stock risk, that's where you can find, some extra moves. I do like Christian's AVGO level at 180.
We just got a good reminder here from Dan Gale saying 8:30 coming fast. About 10 minutes
10
here
minutes.
until the all-important CPI. Let's see if we can fit in a couple other quick news items here.
Yeah.
Christian, something that you had on your radar, you were talking about, we were talking about the energy trade in the pre-show a little bit. And Christian, you had on your radar like electricity deal with Trump. I didn't catch this one, so I'll let you read us the news a little bit if you don't mind.
Yeah, I don't know if I have the actual news, but I know that from the press conference. Trump mentions a lot of things in some of these press conferences, and he mentioned that that he was looking at some type of electricity deal, and I noticed that. So when you think about electricity and, does that involve nuclear? I don't know, but I'm just watching this Oklo, which is a very volatile stock, by the way, but also seeing some support for Oklo right around 23. So I haven't really had these names on my list in terms because I think that they've been too volatile, and they've been coming down pretty decently. But I'm starting to look at this Oklo, which has had a major, sell off, and it's given back that whole move basically to the upside. But I'm looking at like $23. That's some support to trade off of. And, I think we could also talk about some of the other names. I mean, this also went into like all the AI power names as well. GEV has come out.
Yeah.
Sure.
I don't know if you've got a favorite in this group, Dennis, but they've kind of all moved the same way.
Yeah, they have. And this was the big AI trade that they were talking about all last year. And I mean, this trade has come off hard and caught a lot of people here. I think at a certain point in time, there's a bounce in store for some of these names. They're just oversold. Like, remember the quantum names? It reminds me of this trade here, Christian. Remember the quantum names, how they were hot, couldn't stop going up. And then, in 3 days, they gave it 3/4 of the move back. And you know what? It was they just got so oversold. And they did bounce after that. I feel like a lot of these energy names are in the same boat here right now, where we've sold off so significantly, so fast, that maybe we're due for a bounce. I mean, look at, going to your Oklo. We had the huge support, 20 to 25 forever. December, January, and then we broke out and we just went parabolic and we went to 59. Well, that was just stupid. Now we're back, though, at this like 25 level, 23, 24, 25. So you've got great support in here. Is the AI energy trade over? I don't think so. I think it just got overdone. So I think these are actually names that I'd be looking to add to my portfolio. You got to do your homework, do your valuations, look through, make sure you're not playing nosebleed 100 times sales numbers or whatever. But do your homework, and I haven't done that homework yet. But I think some of these names wouldn't hit my watch list at this point in time. They've sold off enough that I think they're due for a bounce.
Yeah, there was a name that got a in this space. It's a little bit on the fringes of the space. Is Talon. This is Talon Energy. Oops, having a little bit of internet
TLN.
issues. Yeah, this is TLN. Rated overweight at Morgan Stanley. Touts Catalyst this morning. Let's see if they put a price target on there. Price target set to 243, which would get you back to almost those previous highs.
I mean, the thing's lost $100. Went from 258 to 158 in a month and a half. I mean, these are serious sell-off, folks. So I think, like, if you're getting all bearish and selling your stocks now, I mean, where were you 3-4 weeks ago? I mean, you're late to the party if you're like, oh my gosh, I can't take it anymore, get me out. I think you're close to like selling the bottom on some of these names. I mean, the Talon, TL, like, you can just look at the multiples here too, and I don't follow the company closely, but foreign multiples 30. It sounds kind of expensive for an energy stock, but maybe there's a story to it. Just going through a few of these other CEGs, 21. It's starting to get a little bit more reasonable. I know, other ones they've liked is BST, that's 16. So, I mean, we've come down on these names enough that valuation is starting to actually get a little bit more attractive. And if you think they're going to get the AI bump, maybe it's time to start nibbling on some of these names.
Yeah, I agree with your point exactly. I mean, at this point, I think after, I think Oklo is a good example. But, instead of come down and they've been cut in half, or even more in this case of Oklo. Like, I think that these names are now I'm starting to kind of think, hey, maybe the bottom is I don't want to say if it's in yet, but I'm starting to think that these things are looking attractive to me. And back to the point with the semis and looking at Broadcom as well.
We got some background noise here.
All
Trying
right.
to figure out where that's coming from. Brent, it might be coming from
Yeah.
you. No.
Let's see. All right.
I think
Let's
we're okay.
let's do one more here real quick. Talk a little bit about Tesla here this morning. Overnight,
Sure.
we had some news. U.S. registrations down 11% for the month of January. Dennis, were you looking at this one as the news was hitting? I think it was late last night.
Yeah, and so we're at a point on Tesla where the stock has sold off so significantly that everybody's already got this figured out that the sales for the first quarter are going to be absolutely like awful. So when you see registrations down 11%, you're like, oh crap, it's happening here in the US too. But I think we're at a point where it's kind of priced in. We've priced in a really crappy quarter for Tesla. I mean, they're setting the bloody cars on fire, some people. I mean, they got problems there right now. There's no doubt about it. The question is, has a lot of this bad news been priced in? I think short term it has. I traded Tesla again. I bought some last night, just trading from the downside, from the long side, and flipped out already. I think I'm going to continue to just trade it at this point in time. Hard to invest knowing that there's a lot of issues happening here now, and valuation still nosebleed. So I think the company still has a great long-term future here, but the hate for Elon Musk is real, and it needs to subside. When that starts subsiding, maybe that's when you're going to strike and say, hey, I want to invest in Tesla again. But at this point in time, Tesla, from an investing standpoint, I'm saying no. From a trading standpoint, I'm saying yes. I think I'm buying dips on Tesla just from a trading standpoint. If it dips today on the CPI, I may take a shot too. But I would be leaning on the lows of the move. Because I always say when stocks are making new lows, you got to go. Stock starts breaching 217, then it's like, yeah, maybe I'm wrong. So you can trade anything as long as you have a contingency plan, as long as you have an out. But whenever you're putting on trades, always know where your out is, because that's where traders get into trouble.
I just want to talk about real quick too, in addition to Tesla, but also what's been going on with some of the China auto names have been really strong the last couple of days. This is NIO, which had a nice move yesterday. Yeah. NIO, I can't believe the stock is like $5. So we'll kind of start with the lowest price one first. But NIO's made this nice move. I think a lot of people are starting to talk about it because it's not only NIO, it's also LI, which I view as one of the stronger ones. This one's, and I'm watching this level right around 29 in LI or Li Auto, and then XPEV, which also saw a lot of call activity yesterday. But this is a monster move for XPEV. So, it's been a while since the EV names or the auto names in China have started to gear up a bit. But you got a real nice move. I'm just going to bring up the weekly chart here in this XPEV, which is like started to kind of retrace some of this move. So we're getting closer to this CPI number. About 2 minutes to go for CPI. Yeah. So I'm going to bring up my CPI screen, but I like what's going on in the China auto names.
Yeah, I mean, BYD, we're not talking Boyd Gaming, we're talking the auto company, obviously, which trades overseas. That's eating a lot of these companies' lunch. It's been BYD coming in here and basically taking over. And, we're at a point where BYD is challenging Tesla. So, I mean, that's where you've seen this real sell-off, where NIO is a $5 stock, and you've seen a lot of other ones. I think it's BYD that's really been eating the lunch here. We don't want to go too deep into that, but, that's just something to think about because we got CPI.
All right, let's bring in Blue here, and then we'll give a quick preview of the numbers. Here we go. Good morning, Blue Putnam. How's your morning going, sir?
Hey, it's going fine, going great.
We got about 40 seconds here before our CPI data. We're going to get your live reaction on air, if you don't mind. Economist, right now, we're looking for a base reading up 0.3% on a month-over-month basis. That core reading, which excludes food and energy, also up, expected up 0.3%. We got about 15 seconds here. We'll see how the market reacts. You can already see Dennis went into the background there. He's going to be trading this figure. He said if it wasn't that crazy, he might be back. but we'll see about 4 seconds here, folks. Here we go. CPI for February coming in. We're waiting still, folks.
0.2.
Ooh, a little light, ladies and gentlemen. CPI for February up 0.2%. Economists were looking for a 0.3% rise. So a little lighter than expected. Blue, I can see you're looking at the screen here, inspecting the numbers. Any quick, immediate reactions? I mean, you kind of had the sentiment, I feel like, that this was going to be, kind of old news a little bit here. I know you got some other things that you're thinking about, but initial thoughts real quick.
Yeah, it is old news because all of the tariff action isn't in this number. So we'll find out later. 0.2, they round these things, but if you multiply 12 times 0.2, you're at 2.4. You're not at 2%. It's probably a little higher if we delve into the to the decimal places. And of course, the year on year is still closer to 3%, 2.8. So, this is pretty much the same thing. We're somewhere between 2.5 and 3.5 on the CPI, and we're not making progress down toward 2% anymore. That ended a long time ago now. We've been quite a few months where we've been stuck here. And I think as we look toward future months, you will see some tariff impact. So I wouldn't read too much into this number. It is a little light, but I wouldn't worry too much about that.
Hey, that's why we get your opinion here, Blue. So just kind of moving along. It looks like Christian, are you doing a little trading there in the background?
Yeah, a little bit. Let me stop the screen and I'll bring up some of the movers that we've got going on here.
Love
Just
it.
Give me 1 second.
The market likes the number. The equity market likes it because it wasn't a negative surprise. 0.4 would have been really bad, but 0.2 is fine.
Yep. Even in line would have probably been fine, but a little lighter than expected. That's nice. One thing that you had on your radar from a few weeks ago, Blue, is the R word, and you were afraid to say it here, but I mean, it might be okay to say now. You were talking, we're gonna have a recession. He said it. You said a shallow recession in the U.S. So it wasn't anything like crazy.
We've got three things going on. We've got the layoffs at the federal work level. We've got tariffs going on, and we're going to have some budget cuts coming out of this budget reconciliation bill.
Mm-hmm.
None of these things are stimulatory. Tariffs are a tax on imports. When you lay people off, they stop spending, their families stop spending, their neighbors slow down. I mean, it spreads. And we can already see some of that happening in personal consumption. And then down the line, we'll see some slowing and actually potentially some declines in government spending. And that, the short run impact of that is negative. So I think we're in a recession already. We'll see. I see unemployment going up toward 4.5%, 5% over the next 6 months. So, this is going to put the Federal Reserve in a really hard place because inflation is more like 2.5 to 3. It's definitely not 2. And, the unemployment rate might be rising if I'm right about this. And of course, we'll see. But, so now the Fed has one thing that says keep rates on hold, the inflation number, and the other thing says, wait a minute, maybe we should think about lowering rates. The Federal Reserve almost always sides with the economy, with unemployment. So if unemployment's rising, that generally is more important to the Fed than inflation. And the reason that's true is that most Federal Reserve Board members and presidents of the regional Fed believe that a weaker economy will actually lower inflation over time. So they're less worried about inflation when the economy is weak. So that's why, the unemployment rate rising will make a difference. If that happens, of course.
Hey, Blue. Yeah, I mean, I'm kind of already looking ahead towards that Wednesday Fed meeting. And I'm wondering, and we get the PPI number out tomorrow too. So I think that will also have to be, kind of show a downtick there. So I don't know if the 0.2 is enough. I mean, but my question is, are we going to see Mr. Powell blink at some point and say, "Hey, we've got to get rates. We've got to get we can now start to move off of those rates if they start to see inflation downtick a little bit." Now, again, this is maybe the first data point, that we're getting, but we don't have fiscal stimulus clearly we don't have fiscal stimulus anymore, which I think was really propelling the market. People were wondering for a while, why is the market still going up with interest rates still high? And I think the fiscal policy had a lot to do with it. So my question is, do you see that happening? You mentioned employment data. Do you think that employment data has to come out first for the Fed to change its tone?
Yes, I do. And I think it will, but we're talking more like the May meeting or, end of April, 1st of May, rather than the next meeting. You have the unemployment rule, the SOM rule. If the unemployment starts taking off to the upside, you're already in a recession. That rule gave us a false signal in 2024, but that was because we were coming out of the pandemic, the post-pandemic job surge. We really didn't apply. This time around, if we trigger the SOM rule, it's going to be for real. And it'll get triggered somewhere around that 4.5, 4.6 level. So that's several months away, maybe even 4 or 5, but that's the direction it looks like we're headed.
Do you think that SOM rule that came out months ago may have just been a bit early? Or do you think it was wrong?
No, it was related to unemployment went down to 3.4%, and then it ticked back up over 4, and it triggered the rule over a 12-month period. But, that was really all about the post-pandemic job surge ending and getting us on a new equilibrium. So I don't think it was I think it was a false signal and not an early signal. However, the next one, I don't think will be false. I think this time around, we're in a more normal condition for that rule to work.
And by the way, I just wanted to applaud you too, mentioning that, the possibility of a recession. I think that was, a few weeks back that we had you on?
It was right at the end of January. I was not in the recession camp during 2022, 2023, 2024. Interest rates were rising, and I said, wait, we're coming out of the pandemic. It's going to be fine. Now I'm in the recession camp, and I went there about a month ago or so. And, that's really these 3 policy things. I mean, I'm looking for things that are going to put a drag on the economy, even if it's just for the short term. I mean, what we have with the Trump administration is what I would call a rip off the Band-Aid philosophy. This is shock and awe. And that means the transition periods are going to be deeper and have more pain, but they're going to happen faster. And you get to the long run faster. So you can argue that any way you want, but I'm just concerned about being right about whether there's a recession coming. And I saw it, as soon as I understood that tariffs were not really a bargaining chip, but they were going to happen, as soon as I understood that, some federal workers were going to be laid off, you knew this was coming. Or at least it seemed that to me. So it moved up to my base case. But I did have a shallow recession view, and that's because there's no financial problem in the banking sector. You get really bad recessions when the financial sector is the cause. And so, the subprime crisis of 2008, things like that, the S&L crisis of 1990, those are things that give you a bad recession because the whole financial sector is a problem. But our financial sector is quite well capitalized. So, I mean, that's going to cushion the downside. By the way, the Fed lowering rates won't help very much because this isn't about rates. This is about, did you lose your job? Is there less government spending? What's tariffs?
Right.
None of those things are about rates. So when the Fed lowers the rate, say in the second half of the year, it's going to be a pop for equities because lower interest rates are always good for equities. It's not going to help the economy because it's not the problem.
Mm-hmm.
Right. Yeah. That's more along the lines of what I was thinking in terms of equities and not the economy.
Yeah, it's hard to separate the two, but when you're talking about interest rates, you really need to because the U.S. economy is not nearly as interest rate sensitive as it was 4 or 5 decades ago. And some economists just don't pick this up. They They run their little regression models. They're all linear. That's what I call flat earth thinking. They use all 50 years of data with every data point being equally weighted. That's not what I do. More recent data is way more valuable to me. The U.S. economy is just different. So it's less interest rate sensitive. But equities, they're always going to be interest rate sensitive because you use interest rates to discount future cash flow. So equities are going to respond.
I'm just going to give a quick market rundown here.
Thanks, Christian.
I've got SPY on the screen here. Initial reaction was a pop higher, but that move is kind of being faded here a bit. So we're not even above those, where we were at like 3 o'clock yesterday. I think that's a pivot point that I'm watching for today, is whether or not we can get above yesterday's highs and hold them. I would think that we do. I'm surprised that we're not, going off a little bit more to the upside. I would also watch IWM, which we'll see if IWM can hold around this 203 level, which is also around yesterday's highs. But IWM loves to move big on economic news, so that's one I would be watching. I also brought up TLT. The initial move was kind of all over the place, but this makes more sense. I would expect TLT to sell off a little bit, which it's doing. Also, I want to just talk about the dollar. The dollar is moving up 0.2 of a percentage point, so that's kind of remaining firm as well. The VIX right now sitting down around like 25.60. So that's a quick wrap of the markets that you got.
Yeah, thanks, Christian.
Yep.
Blue, you mentioned, I think you were hinting here, you mentioned that you had a few things on your radar moving forward, and I think you hinted at one here just a little bit ago. We do have a little bit of a budget showdown in the Senate Friday night, right?
We certainly do. By the way, it's a full moon eclipse called the Bloody Moon. It's around 2 a.m. East Coast time. On the
nice.
14th.
Throw that in the mix. That's what we need.
So
that's what we need.
Say the heavens are not aligned very well. But this is all on the Senate, and the Senate will not pass the House bill exactly like it is. It'll do something a little different, and we'll see what they do. It's going to be some kind of a compromise. But the House bill does not even include raising the debt ceiling. And it really is just kicking the can forward. Now, they want to kick the can forward at least to April. On April 1st, there are 2 elections in Florida for House Republican seats. So they're going to pick up 2 more seats that are vacant right now. Those were seats for relative to cabinet appointments. So they're that'll help out the House Democrats. The debt ceiling, if it's not solved in April, and it could be, but if it's not, then that really panics the markets in June and July. So, if the debt ceiling is not off the table by April or May, your August vacation, you're going to have to trade during your August vacation. That's all I'm saying.
Uh-oh. I don't know if anybody wants that, Blue.
Well, a lot of people don't, and they might even abolish the debt ceiling. There are a lot of people that are in favor of that. So that's a fluid situation. But right now, all eyes are on the budget. All eyes are on, they need a handful of Democratic senators to go along with that. That is not going to be easy, but the Senate has always been a somewhat more negotiable body of Congress than the House. So.
Sure.
But you don't even need to tune in till Friday night because they're going to wait till the last minute.
Right. Well, Blue, we appreciate you coming on for these important data points. I'm sure we'll have you back for when we get in our next inflation reading, and we'll get a little check-in on how I don't want to say it's but we'll get a check-in on how the recession story seems to be playing out. Thanks for joining us, Blue Putnam, former chief economist at CME Group.
Thank you.
Thanks, Blue.
Dennis, how did you do over there?
Yeah, the steady leak here. Just surprising to a certain extent that we are continuing to leak. I mean, the TLT lie detector test is a little bit concerning that the TLT continues to show weakness here. One thing to consider, which I've been saying, though, is the TLT right now is an indicator of risk on, risk off. So when you get a market that's got a decent number, TLT is risk-off vehicle historically. So don't be surprised, just because TLT is moving down here doesn't necessarily mean traders think that rates are imminently going to go higher here on this number. It's more of a risk-off thing that equities are rallying and money's coming out of treasuries to go into stocks. I do think that with everything, like sometimes it's like lay out the land, like we come in yesterday morning, markets are a little bit strong, and then we get, this escalation of the trade war between Canada and the US, and it's battle. The market starts selling off, doesn't like it. And then you get some relief in the afternoon where there's some de-escalation. Now you get a little bit of relief that, hey, the CPI number wasn't hot. So I think what you have right now at this moment in time is simply profit taking from everybody who was buying stocks yesterday.
Sure.
Even myself, I bought the close. There's people who are buying, stocks. I think they're flipping out saying, yeah, boom, I'll take the money and run. I do think we're going to hold on to some of these gains. I don't think we're going to turn around and go red here today. If we do, it's a really bad thing. But I think we're going to hold on to these gains. And I think I'm actually looking, to strike on this dip that we're having here in the last few minutes, because we are dipping back. I think the dip's going to get bought here, though, and I would not be surprised if we start catching a bid here again. So I'm of the opinion that I'd actually be buying. I know it doesn't look like a dip when you're up 50 points, but we were just up. What were we up, Christian, about 10 minutes ago, 15 minutes ago? We were up, another 30?
Yeah, I think so. We were up over 1%. So I agree. Like I'm sort of like, I think you're getting a little bit of I don't want to say a gift with this market kind of coming in, but we're not even above that. Here's the pivot from yesterday's highs. I would think this would be very good news to see a downtick in inflation. Now, I get it. Like Blue made a good point about, hey, this could be a little bit of old information, or stale information, so I get that, but I think right now good news is good news.
I think so too. I think the market wants some good news, getting some good news here. I think you just got some profit taking after the initial pop. I think we might get some follow through buying here today. So I'm actually looking to buy dips here again today.
What it's like a top couple that you got on your radar right now, Dennis?
Well, Tesla. Let's just talk Tesla as a trade, not as an investment. But it's continuing. Sure. Registration numbers were not great here that we got overnight. They're ignoring it. And they're like, it's got the support of the president. Obviously, ridiculous support yesterday with, the vote of confidence. I'm going out and buying a Tesla. There's a lot of Trump supporters out there that might be saying the same thing. It's like, okay, you know what? If he's going out there and he's supporting it, I've been thinking about getting a new car. I'm going to go to Tesla as well, too. So, that helps. Does it stop, this Elon Musk hate that's out there? No, it doesn't. But does it give you a little bit of relief short term and in a stock that's ridiculously oversold? Not just a little bit oversold, ridiculously oversold, like 450 to 220 in a month and a half in 6 weeks. That is a serious off. And again, just as much as we were talking about support levels, you start looking monthly supports. 200 to 220 is a huge area of long-term support for Tesla. We've come all the way back down there here. So I think this is a logical place where it starts to bounce a bit. Am I chasing it up 13 points here? No, but if it comes back in, let's say we get back in 237, 236, 235 here, maybe I'm striking. So I think that's where I'm looking, again, not long-term, not putting my portfolio and forgetting about it at this point in time, more just trading. It's a trader's market right now, and I think it continues to be a trader's market until further notice.
Yeah, and I'm just looking at some of the names that are moving pre-market, or some of the names that are up the most. I see a lot of growth stocks that are moving on this or have accelerated to the upside. You mentioned Tesla, which you could see where Tesla was trading prior to the number, so you got a lift there. But even like something like look at AppLovin Go.
Yeah, you read my mind. You were reading my mind, Christian. That's what I was just thinking. Was AppLovin.
Palantir is another one I see moving too. So, all of these names have had pull, but they've all pulled back. So let's see if they could kind of begin to turn the corner. If you look at all of these charts of the growth names, I talk a lot about the 5-period moving average and whether it prices above or below. I know Brian Shannon looks at that too, but maybe if you could start to see some of these names recapture that, I would be watching that. We mentioned Oklo, Broadcom. Another name that I'm watching too, which I just forgot what it was, but yeah, Palantir was one. I'm also watching in the European space Deutsche Bank, which saw some call activity yesterday. If you're looking at a to try to get up in Europe, I've talked about how I've wanted to get into Europe a bit, and I actually put on a trade yesterday in Deutsche Bank.
Oh, you did?
So to get a little
Nice.
bit away from the U.S. Question: we could do some ticker time. Any names that anybody wants
we'll
to
do
go
it.
through?
I just want to expand on your thoughts here. Definitely a Momo rally across the board. Nvidia having a huge pop here as well. I mean, Nvidia, when it was getting down near 100, was talking about trading 25 times forward earnings. Starting to get pretty cheap here, folks. You know, if you believe in the AI trade, there's no AI stock better than Nvidia. And you've come off from 150 down to almost $100. I mean, at a certain point in time, it's probably time to strike. Now, again, we just rallied here, you know, so I don't think it's the market you need to chase in. But now you're thinking, well, is 104 going to be the short-term bottom? It's up at 113. I could get this at 110. Maybe I strike. You know, that's how I think about it, you know, when I'm coming into some of this stuff. But, I mean, Europe's a great point, too. I've been trying to diversify myself away from North America. That's what I've been doing with my long-term portfolio the last few weeks. You know, I sold a lot of my Canadian stocks. We know that. Talked about having Bank of Montreal in my long-term portfolio for 20 years. Forever. It was in there forever. I finally sold it because, one, it was trading near all-time highs, and two, wasn't pricing any of this trade war. I sold it at 105 3 weeks ago. It's 95. That's a big move for a bank. Why? Trade war. I mean, the market, that price is in nothing. That's what I said on the show that day. It was out there, folks. We knew the trade war was coming. It was, you know, 100% a tradable event, and 100% if you were selling Canadian stocks 3 weeks ago, you're pretty happy that you did. And so now some of that money that I sold out of these, I'm like looking, I'm like 90% invested in North America in my long-term portfolio. I'm like, maybe it is actually time to start diversifying out. So, you know, I have a little bit of China, Alibaba, Baidu, FXI, you know, equivalent. I've been adding that emerging markets, you know, looking at that. And, you know, I did that 2 days ago. Pretty happy that I did because we got a 2-day rally going on here in the EEM as well. So I think, you know, just looking outside the U.S. isn't a bad idea either. Let's do some ticker time, then.
Woo, ticker time. Looks like you want
SMC
to start. There you go, Christian, SMCI.
SMCI catching a nice move, and it's actually like if we take a step back here, it had a really nice day yesterday. So this is the daily chart of SMCI, which is it's not going to update for price action this morning, but you know, the level that I'm watching here is 42.15, which I think we've sailed through. So I don't mind. I haven't really been bullish on SMCI, but I kind of like the way that it's been. That it reacted yesterday. I also like that probably that it hasn't been going down, just to kind of look. So I always like to do this little exercise here. Look at the Qs over the last like 5 days, right? The Qs have been straight down. SMCI has actually been holding in there. That is called relative strength, and it's a tech, you know, it's a tech name. So I actually think it's doing something a little bit different here, a little bit positive.
And finding support back where it found a lot of support between 30 and 35 all through December, January. You know, we had lots of support at 30. Didn't quite get to the huge support level of 30. But as you approach support, you start to find support because people are stepping ahead of that support level. It's a big pop for SMCI. I don't think I can chase it here. But again, do I have it on my watch list? And if it checks back to 41, 42? I mean, I've said before, if you believe the numbers that SMCI has, it is one of the cheapest AI stocks out there. Its PE forward multiple on their current numbers, which are not BDO audited yet, but BDO is in there. Maybe we'll never hear from BDO, is 11. It's trading 11 times forward earnings. It is dirt cheap if you believe the numbers. I don't know. I don't own shares because I don't know if I can believe the numbers, but, you know, we obviously had, you know, them file their missing filing there, you know, a month ago or 3 weeks ago. Stock sold off after that with the overall market here. But it's kind of been forgotten that maybe SMCI isn't cooking the books. And if they're not cooking the books, this stock is dirt cheap.
I have up Uber. That was showing some strength about, you know, a week ago, and then kind of broke that range last week. I would watch this. I think this is the 50-day moving average that's kind of in the picture. That's Uber. Also, I think an interesting one to go over is Baba. Right, so the China names have been acting really well. Baba's been consolidating in here. I'm still long some Baba.
Me too.
And you know, let's see. I want to see it get above 145. I'm holding the last portion of a trade that I have on. because I want to see if it can break out of this like flag type pattern that it's
Yeah.
putting in. You got to be a little bit patient here while it's consolidating all those big gains.
Yeah, with you here, Christian. Same thing. I've sold 2/3 of the position, but I'm holding the last third of the position for the same exact reason. Is I'm seeing the consolidation here, and I'm wondering if it can't resolve itself to the upside here. A lot of times, see a move, consolidation period here, and then a continuation of the previous move, which would take us up like the 180 level. So I don't think it's a bad environment to be investing overseas as well. So I kind of like the BABA. I almost considered rebuying the stock that I sold. I sold it right in here in the mid 130s. I almost considered rebuying it, but I haven't done that yet. And again, when I'm buying emerging markets, I'm getting some exposure to BABA as well. Lots of other fun stocks. Disney got smacked around on the Delta news. So Disney is a travel stock. Delta warning, knocked it down. Didn't pop back with the LUV news. LUV actually gave back some of its gains as well. So the travel stocks are a little bit in the gutter. You know, if the economy is slowing just a bit, less people going to Disney. And don't discount the fact, I know I'm not just saying, but, you know, there is a lot of Canadians and international investors that like to go to Walt Disney World in Florida and California. And I think there's a little bit of like people maybe not booking all their trips to the US as much as they were in the past. So I think Disney actually suffers from the trade war to a certain extent. I know it's a reach, lots of, you know, but international, you know, and international people go to Disney World. And, you know, not just talking from Canada, from all over the world. Sure. And I know, yeah, there's Disney France, Disney, but it's not like Disney Florida and Disney California. You know, that's where it all started, Disney Florida. So I do think Disney is a little bit, you know, under the weather here, the stock, because of the trade war.
No Disney, eh? Sorry for my bad jokes.
That's it. So no Disney for me
like
at this point in time. But remember, as we come into long-term supports, 90 is a huge number for Disney. You start maybe thinking about it again.
Affirm. This one has been. This has been a growth stock. Another growth stock that has been really beaten up. However, I see support here at 47.50. That would be my level to trade against. And again, it's in that bucket. And right now, the market's for at least for this last half hour, the market is embracing some growth stocks here. You got a nice move here. I would watch 51.58 to the upside. That's about another 3.6% up. Dennis, I got a question for you.
Yeah.
The banks. Can the banks, I mean, look at what JP Morgan has been doing. Like we had Blue on earlier, but like JP Morgan is kind of it's a recession indicator for me. JP Morgan down to the 200-day moving average. You like it?
Yes. Long JP Morgan, bought it at 240. It went to 280. I sold half the position. Wish I would have sold it all because I could fully reload it here right now. But again, talking about stocks coming down, not only to the 200-day moving average, but long-term support areas, you're in there. JP Morgan still is going to benefit from a Trump administration with less banking regulation. And I think we're just selling everything out now, throwing the baby out with the bathwater. Bank of America been selling off, JP Morgan been selling off, Citi, Wells Fargo, you pick your bank, it sold off significantly, basically giving back the entire Trump bump. I think we're coming to support levels now where we start nibbling on the banks.
Awesome. Great.
I can't believe this. Like all of this summing it up here today, I'm feeling a little bit more bullish. I'm feeling a little bit like,
look at this.
I know it's
Look
not
at
supposed
this
to be
guy.
allowed, but I'm starting to feel a little bit more bullish here. And, you know, I've been sitting on a lot of cash. I think I'm putting some of that cash to work in some of these names. That Christian is just so good at giving us names here. Like he's like, bang, and this one I was like, kind of like that. Like this is why I come for all your guys' trading ideas. And Christian is throwing us like different ideas here right now. I kind of like it.
So here's a question for you. Like I know that we haven't seen like that capitulation to the downside. Like people are really starting to analyze like what do we need to see, you know, in terms of a washout. I'm not sure that, you know, in terms of like the VIX, we got the VIX around 30. Okay, that's pretty good. Do we see like a capitulation? No, not really. We never saw like the heavy volume washout. It's been a steady grind lower. Do you think that we need to see one big washout before the bottom is in?
Nah, I don't know. These are all kind of washout days, though. And in certain things, we could argue that we've seen we haven't seen this violent, like, oh my gosh, we just dropped 200 points in 20 minutes and like that was it. But we've had a lot of like serious selling, you know, and I think we have a little bit of seller exhaustion here too. I don't know if it's over. Nobody knows if it's over. It all is going to depend on what the next Trump headline is coming. I mean, but as long as, I would say this, if Trump just cools it for a bit, doesn't come out and say, you know, we're going to trade war here, and we're going to tariff here, and we're adding tariffs over here. If he just cools it for a bit, this market can bounce. So it all depends kind of on what's going to come out of the Trump administration, because it's kind of, he's coming like a bull in a china shop and tearing everything apart. And the markets don't know what to think about that. He needs to take a breather, go golfing for a month, and this market could actually recover a little bit. But if he continues to come in with the bull in the china shop and tearing everything apart, international investors don't know what to do. You know, U.S. investors don't know what to do. And, you know, I don't know what to do. So I think I'm still just, you know, obviously glued to the Trump and the macro headlines here, but hoping he cools it for a little bit, because I think we're very oversold on a lot of names.
9 o'clock here, ladies and gentlemen. You got any quick closing thoughts, Christian?
Closing thoughts. I mean, yeah, I mean, we're going through this, you know, kind of thought process to kind of help, and like, you know, so no one knows, like, you know, that's what makes a market. There's no 100% guarantees. You know, if you go back to that the reason why I bring that up about the VIX and 2022, right? We never had the VIX. I remember everybody was calling for that the VIX needed to go like blast off to like 50 or 60. We never got it, right? The markets bottomed in October of 2022, and the VIX kind of stayed around 35. So I kind of agree with what Dennis says. I would like to kind of wait and see a little bit more, but I don't know if you need that capitulation selling, because we have been kind of hit by death by 1,000 sell programs. You know, it doesn't always have to be textbook of like, oh, we need a washout to the downside. I think, you know, try to observe to see, you know, what some levels are. I would like to see the indices get back above the 5-period moving average, but you know, I think that there's a lot of things that are washed out at this point.
All right, folks, we're gonna wrap it up here.
Washout Wednesday. I like this. We had, you know, the Monday dump and the turnaround Tuesday to a certain extent. Now it's washout Wednesday, where everything's kind of washed out and we're rallying here. So this is going off script too, because I called this the week. I tweeted out Sunday night my game plan for the week, and I said Monday Trump dump, Tuesday Trump pump, Wednesday Trump dump, Thursday Trump pump, Friday Trump dump, followed by a Trump pump. That was my game plan for the week. I had the first 2 days perfect. I was like, Trump dump on the Monday, Trump pump yesterday, but now this Trump pump throws everything out the window.
We're going to see
what, I guess it was CPI pump.
Well, we're going to see what happens tomorrow with the PPI. It should be a similar story here on pre-market prep tomorrow. We'll break in with that news on PPI. We got similar expected readings as we got for CPI today. We're also going to have one of our favorites on the show, Jim Tassoni, on tomorrow. He is from Armor Wealth Strategies. Hope everyone has a good trading day. We'll be back with y'all tomorrow. Good luck, everyone.
Have a great day.